Hello and welcome to BloombergQuint. You're watching IPO Adda, and my company in focus today is Prudent Corporate Advisory Services. It's one of the independent retail wealth management services and one of the largest mutual fund distributors in the country. If you look at the market share, it's somewhere around 18% odd of the new of the entire commissions that they get. And joining me is Sanjay Shah, who is the chairman and managing director at Prudent Corporate Advisory. Sanjay, my first question: you are providing an exit route to Wagner and some other shareholders. Uh, as a advisory services, you don't have any requirement of capital.
Yeah, so I think you are absolutely bang on what you are talking about, because if you look at Prudent Corporate Advisory Services, we are purely a retail distribution house. And in case of a retail distribution house, what is required is to set up the infrastructure and the ground level presence. So if you look at today, we are spread across 110 branches over 20 states, and we have created a significant digital assets in the last couple of years. And we have almost about 23,000 retail investment mutual distributors who are aligned with us. So I think the entire setup which is supposed to be created has been created by us over a period of last 20 years. And it's basically a pure asset light model. It's not a manufacturing kind of a business where you require to invest into a plant and machinery. So it's a business which regularly generates cash, and hence company doesn't require any fund. We got the private equity as an investor before a couple of years, if I talk about this, before 4 years, where I diluted personally out of my holding. So today, if you look at the holding pattern, 40% is owned by a company called TA Associates, and they wanted to dilute a partial holding out of that. So out of 40%, 50% of that, so half of that, 20% they are diluting. And hence, it's a pure offer for sale, but company do not require any kind of cash.
Agreed. Let's get into the business model of yours, because it's you're providing a technology platform to many of the mutual fund distributors. How does the revenue get shared between you and the mutual fund distributors? Because my understanding is that the mutual fund distributors come on your platform, and through your platform they subscribe or redeem mutual units of mutual fund. So how does the revenue share move between you mutual fund distributors?
So if you look at, basically it's not only the revenue sharing which we do for them, but if you look at the life of mutual fund distributors, we take care of everything which they require to do in their business, starting from, let us say, lead generation to servicing the customer, acquiring the customer. We have large number of digital platforms which we have created, like Funds Bazaar, Policy World. So a lot of things on the mutual fund side. We have a digital platform. Insurance side we have something on the broking also. So our role is to make sure that they do a regular business. We try to motivate them, we try to drive them. Now, when you come to a sharing arrangement, I think it depends on when we have a lot of tiered structure in our system from L1 to L8. So there are 7, 8 sharing model, which depending on the size, depending on the locations, we have a sharing. But if you look at the balance sheet as a whole, there are two businesses in the Prudent. One is B2C, where we handle our customers directly. So I think Prudent started business in 2000 as a B2C player, where we used to hire relationship manager and they handle the customers' money. That business still is about 10 to 12%. And the rest 88% money comes from the B2B, which is our 23,262 ARN holders. Now, if you look at the balance sheet level, my brokerage cost is about 61%. If you do the backward calculation, I think almost we share 67% of our receivable with the ARN holders. So it's a 2/3 sharing and 1/3 is retained by us.
Okay. So if that is the case, how do you see this entire game changing? Because in the last couple of years, we have seen fintechs coming into the play. Many of them have started now doing zero commissions kind of play, which is there. We saw that coming into the brokerage industry, where discount broking came and disrupted the entire market. And today, the top 3 or 4 are discount brokers in the country. The same thing is what fintech is trying to do. It may not happen in a year or two, but it will happen in the next 4 or 5, 6 years. If that is the play which is going to come in, how is it going to disrupt your business model?
So I think, say, first thing is when you're talking about fintech, I would love to say myself also as a fintech player, because in case of a fintech space, what they are doing is they are providing a strong digital backbone for the investor. In our case, we have created very, very strong. Today, if you look at my funds bazaar, if you look at my policy world, I can proudly tell you it is parallel to none. If you look at all new age platform, whatever they are giving, everything is provided by us. So I would love to say myself as a fintech, but because we are already there in business for last 20 years, people will term us as a old player. That is number one, as far as change is concerned. Second is, I believe at the end of the day, I think that if you look at, people are now realizing the difference between those who are just doing the business without any revenue, right? So at the end of the day, how long these guys will sustain without charging anything? And because when you don't charge anything, you don't have the inbuilt advice. So probably I again believe that whenever there will be a significant volatility which will come in the market, people will start looking for the advisor. And globally, if you look at it, is proven by various reports that advisors do add alpha. So it's not only the cost which you save by going direct, the kind of lot of support, activity, asset allocations, handling the customers in turbulent time, lot of value which is added by our advisors. And I believe our advisor will always remain relevant. The relevance might be volatile like market volatility, but over a period of time, people has to look for advice.
But has advisory brought in money for anyone? I mean, in the sense, we are a market where people take for granted that advisory is for free, right? I mean, the SEBI has been trying to de-alienate advisory and distribution. There have been 3 papers which have come in, and I'm assuming that in the next year or two, some decision would be taken on. If you're a distributor, you cannot do an advisory function. If you're advisory, you cannot do distribution. So it has to be independent of each other. So if that happens, how is where will you be aligned, distribution or advisory?
No, sir. Sajeet, this already happened. What you are saying is it's already happened. SEBI says that either you become a distributor or you become an advisor. But if when you are a distributor, you can give the incidental advice, right? Because if I'm distributing all the 30 mutual funds product, and when you come to me, at least I need to ask you, sir, what is your goal? For how many years you want to invest? What is the risk appetite? So that risk profiling and suitability analysis is required to be done by us. However, we cannot be advisor on a larger canvassing. But within the mutual fund distribution, we can definitely do the incidental advice. That's a very clear thought.
But that's a very gray area, right? Means what is incidental advice which you give to a investor?
No, but sir, you look at otherwise somebody comes to you. How can you just say somebody that you just take whatever is available to you? What is the role we'll play then? So I think probably it's a very thoughtful process from the regulator side. They say that we don't want you to give all the product. So they wanted to avoid the conflict. They say that when you go and meet somebody who's saying which scheme, how much you are earning, give them an option of 5-6 competing schemes. Just don't force somebody for one scheme. So I think there are a lot of very defined rules which they have differentiated for the distributors. And I think in case of investment advisors, they said you can't earn anything from the manufacturers. You sell all the product but charge the customer. So I think the wall is already created between two. And I think that's a very thought out after what you are very rightly saying. After 3 consultation papers, some consensus emerged last time when SEBI came out with the regulation, and we believe that sanity will prevail at least for a reasonable period of time. So the point is, mutual fund distributors and RIA, where both will coexist, will continue to remain a distributors. We don't have an intention to become a RIA, and we'll continue to provide the incidental advice.
And do you think that advisory will bring in kind of revenues that today distribution is bringing you at some point in time? In the sense, from an industry point of view?
Sir, I think industry has to evolve. Frankly, if you ask me today, even if you want to become an advisor, there is no charging mechanism. So let's say for a retail investor, I'll just give you a perspective from Prudent point of view. If you look at my number of investors, so I have a 3,60,000 rupees average AUM of per investor. We have a 48,400 crore of AUM as on 31st December and 13.5 lakh investors. So my average is 3,60,000 rupees, right? If you want to charge 1% to these guys, it's about 36,000 yearly. Now, how can I collect? So collection mechanism is not there. If there is some regulatory change, we say that there is a tri-party agreement between the AMC, advisor and the RIA, investor, and automatically money gets collected and given to us, then it's easy. Otherwise, it's very, very difficult. So India is a very retail-centric market. And if you look at a couple of developed market example where we have thought about, it's a classic case is UK. UK now is struggling. Yeah, people are not advising the bottom of the pyramid. They are just wanting to advise the top end of the pyramid where they are easily going to give you the money. So if you make advice compulsory by charging, I think people will not reach out to a ground level.
I'm asking this because your commission to AM ratio is around 1%, 1.06% versus industry's 0.65%, which is very high in that sense. So do you see eventually this commission to AUM ratio coming down gradually?
So first of all, industry is the, if you look at the current structure of the industry, which is 37 lakh crore, out of that 17 lakh crore comes from equity, rest is debt. If you talk about Prudent, out of 48,400 crore of total AUM, 92% is in equity. So that is the reason industry's average is 65 basis point. My average is 1.06 because we are pure equity distribution house. And that's the one reason, because in case of liquid, you might earn brokerage of 10 basis point. In case of equity, you earn brokerage of 100 basis point. And that's the reason I think Prudent is having a higher brokerage. Coming to your question, I think because virtually, if you look at last time, SEBI came out with the changes saying that as your AUM increased by 5,000 rupees beyond a threshold, you start reducing your expense ratio by 5 basis points. But that's an incremental. That's incremental, sir. And we believe that today, if I am at 48,000 crore of AUM in December, and if I am going to grow at so I think it's going to be a volume which is going to be much larger than the margin pressure. Margin is incremental, sir. So today on 48,000 crore, I'm earning, let's say, for 1.06. So additional 5,000 crore might come at, let's say, 1.04. So I think that is not going to hurt, number one. Number two, even if my earning goes down by a few basis points, I'm at pass-through mechanism. I have a sharing with my partners, right? So 2/3 sharing also will be probably will be impacted accordingly. So even if the industry has an impact of 5 basis points, my impact will be only 1/3.
Okay, so basically you're saying that even if it comes down on the volume front, you may be able to catch up, but on the percentage commission basis, it may come down gradually as your AUM goes up, right? That's what you're saying.
Yes.
How do you look at the entire growth of SIPs for yourself at Prudent? What is the kind of average tenure of SIPs, which gives you a good idea of kind of revenue fees? You can easily forecast what kind of commissions you're going to get because of the SIPs going forward. And we have also now seen the new generation of investors who are coming in. A large part of them are now moving towards direct mutual funds rather than going through intermediaries like mutual fund distributors and you. To save on that 1% commission which is there, because over a period of, say, if he's putting in for 5% or 5 years or 10 years, he's saving on 10% of his return because of that. So as that catches up, and as you said, a smart investor is now also starting mutual fund SIPs. How is it going to influence your business model?
So let me first of all tell you about our own SIP book. So as on 31st December, we were having about 15,25,000 SIPs we were collecting per month with an input value of 387 crores. So if you do a reverse calculation, roughly about 2,500 rupees per SIP which we are collecting. And usko agar aap annualize karoge, 387 into 12, roughly 4,600 crore which we collect annually. That's a very significant amount, right? So if you see, I think when you're talking about the growth projection or the continuity of business, I think this is the very rock solid what you call the growth driver for us. So it's almost about 10% of my AUM. मैं 4,600 करोड़ अगर आपको साल का इनपुट वैल्यू कहता हूं, and if my AUM is 48,400 crore, so almost 9-10% is my steady revenue, steady book which will come from them. That is number one. Number two is, if you look at in last 5 years, industry grew at on an average about 18.9% growth on the AUM, while we grew at 32%. Now our growth has been significantly better because of this steady flow of SIP, sir. Because this SIP, in spite of the market volatility, normally SIP stays. I'll just give you another very important highlight is that out of 15.25 lakh SIP which we have, almost 47% SIPs are perpetual in nature. In the sense, अगर आज संजय ने चालू किया SIP 5,000 रुपए का, I'll say it has to continue until cancel. And we have seen the habit of the people, they continue to invest perpetually. That is very strong parameter. And rest 50% we have the average of about 17 years. So the most differentiating factor of Prudent is a retail centric, very strong SIP book. And if you look at today, industry का 11,000 crore था December के अंदर, हमारा 400 crore roughly 300. We are almost about 3.5% of the market. So we contribute significantly to the SIP book also, and that is something which we feel that is very important. In case of SIP, because I think still I believe that we want a lot of people to come into the market. So we always say, let you first of all come to the market and then you talk about the expense ratio. And expense ratio is not the only thing, because virtually what is important is not the return which you generate, it is the asset allocations, how you handle the customer's behavior. And that is very, very important. If you look at whenever the turbulence comes, if you ask any AMC, they will also always say, Sanjay bhai, in case of volatility, I think we see a lot of traction on a lot of panic on the direct side. Right? And people have a habit only to buy the 1 year return. If you look at on the direct platform, people will go and search 1 year return. आज की तारीख में लोग सिर्फ technology खरीद रहे हैं. People are buying only Brazil because the oil has done significantly better. You do not know what will happen to the oil Brazil story next 3 years. So I think these are where people will always need the advisor. So probably direct might grow. I'm not saying no for that matter, but I always look at my growth in the non-direct space. And my belief is that non-direct space will continue to significantly grow because of with the help of our advisor. If you look at the AMFI paper also, AMFI has said that today on ground, there are only 126,000 mutual fund distributors. This number has to go to at least 5 lakh. And AMFI, with the help of SEBI, are doing a lot of activity to enhance the ground level footprint of the people who can go and meet the people and advise them. So I think AMFI also realizes the need of advisor. We are the very unique player who catered to the need of advisors, and we feel that because AMFI is also looking at that segment, we are also looking at that segment. We'll definitely have the significant advantage in that category.
What percentage of commission revenues come from distribution of PMS and AIF?
So actually, sir, we were not selling PMS AIF significantly. In last 2.5 years, we started selling because originally as I told you, we were the B2C player. In 2019, we again started 4-5 branches in the wealth segment. And the main reason of starting branch in wealth segment mainly because we wanted to start providing this PMS, AIF, market-linked debentures, unlisted equities, bonds, everything to the retail players also. So today, if you look at on my December balance sheet, I think hardly about 3.5-4% revenue comes from all this product, which is PMS.
Because there is a move to the regulator to regulate some kind of commissions there, because today there is an upfront commission which is coming in from PMS and the AIF. It's possible that instead of upfront, it will be spread over the life of the investment, like we had earlier in mutual funds where it was upfront and then it was done over a period of the entire mutual fund which has been done. If that is the case, how will the dynamics change for many of the distributors like you?
So actually, we do not have a significant exposure to this entire segment, first thing. Second thing is, sir, out of PMS and AIF, PMS has already moved to an all-trail model. So, and I'll tell you a very important point is, let's say, for example, in case of a mutual fund distribution business, SEBI came out with a regulation for all-trail model from October 2018. But we were already in all-trail model since 2015 because we always appreciated the power of trail rather than one-time revenue. Because one-time revenue is a trade bill. ठीक है, आज माल बिका तो पैसा मिला, अगर कल माल नहीं बिका तो पैसा नहीं मिलेगा. While trail is perpetual in your nature, and today if you look at my revenue, almost 90% revenue comes from mutual fund distribution, which is perpetual in nature. That is significant predictability of my balance, of my PNL.
Another issue which is there in your risk factor is the exposure to the NACL case. You were one of the spot exchange brokers, and there have been a couple of shock notices which have been issued to you. And a couple of early orders have been adverse to you as well. How do you see this going forward? If the final ruling also is adverse to you, and you are asked to shut down your commodity brokerage, because I think that has been now merged into your normal broking as well, if I'm not wrong. So how will that impact?
So I think I have two viewpoints here, sir. First thing is, we were not directly dealing with NSCL. We were our clearing and forwarding agent or clearing activity was done by IBMA, which was another arm of NSCL. Unfortunately, because it has happened industry-wide, so we were also part of that, and it was basically because the product became so popular, we were forced to take the license, and we worked only for last 8 months in the commodity business of NSCL. Otherwise, our entire carrier's revenue is at 12 to 13 lakh rupees. We never had any kind of revenue from NSCL. That is number one. Number two, today also, if you look at in my broking business, I think commodity is hardly about 2-3%. So I'm not expecting anything will happen. But even if something happens, I think the impact would be significantly lower, because there are two things. One is that in the entire book of Prudent Corporate as a whole, the broking is about 4.5% of my total revenue, and within 4.5%, my commodity is also 1% within the 4.5%. So I think the impact would be very less. But still, at the end of the day, it's a case, and we need to probably rightfully fight. I think it's an association level also we are fighting, and there are a lot of representation going on, a lot of matter will be going on, and I believe some point of time sanity will prevail.
We've seen that in these cases. Things are a little fluid, because now even the Supreme Court has started, attaching. There's a committee which has been formed, and which is going to, sell assets of all the defaulters which is there. But we've seen some of the brokerages taking a proactive step, reaching out to SEBI for consent application, even shutting down their commodity broking business. Have you looked at those options as well?
Because I think we were not direct, or significant exposure very less. So we thought that, and we were working through IBMA. So I believe still, if the regulator want to take a view, they might say that if you are clearing agent, if you are clearing everything on your own, there might be a question. Still, there should not be a question. My belief is, because everybody were knowing that it is the regulated entity. I think it's basically it's a impression which has been created where everybody will just fall in that impression. But I think I'll इसको मैं अलग दो तरीके से देखूंगा सर. One is those who are working directly, where they were also the clearing agent, and there's another set of player whoever the clearing was IBM. तो जहां पर IBM में clearing करता, हमने तो clearing का काम भी नहीं किया हुआ. So I think they might look at these two set of things separately, and in one set they might take some action, in another set they might give some exemption. That's my personal view.
In the stockbroking thing, I spoke to you a while back about, discount brokerages coming in. You also have a stockbroking platform. Have you looked at expanding that platform? Because you said that if you look at yourself, though we are 20-year-old, we are also like a fintech which have various platforms. But why haven't you expanded your stockbroking platform into pure play platform stock trading? Like many other brokerages have done, like an Angel One or others have done it.
So I think probably we were not mentally prepared to take any huge balance sheet risk. And I think whenever the question comes about funding the retail investors, I was mentally not prepared. And from day one, we were pure long only retail distribution house. So our foray was always on the regular revenue which is coming from the distribution of financial product. However, if you look at the all regulatory changes which came in last 2 years, we are now thinking very serious. Because if you look at in current content, the new regulation which has been implemented from 1st of May, where the investor is also supposed to give 50% cash margin apart from the total. So I think if you look at all the regulatory changes, I think the industry is becoming very clean from the point of risk. So now I think seriously, it's my perception, I need to go to the board also. But I think now we'll look at the broking from a digital perspective, definitely, because now the risk is out.
Yeah, because the risk is now entirely on the person investor who's trading, right? Means you have to put upfront margins, all cash margins, all in place before you do a trade. So for a platform like you, it shouldn't be a risk at all at this point in time. Earlier, you had brokers who used to lend credit to the investors. Now it's not even allowed that way.
Yes. Perfect, sir. Perfect. Yeah.
From you also acquired Gennex, which is an insurance broking arm. How do you plan to scale that up going forward?
So, sir, insurance basically, there are a captive team also in the insurance, almost about 70-80 business qualified people who work on that segment. And we started converting our mutual fund distributors into the point of sales. So if you look at IRDA came out with the regulations where the point of sales are allowed to sell a couple of insurance defined policies, and we have converted almost about 6,500 of our current ARN holders into a point of sales. And so the growth model or the how we'll do the business, one would be we have an online platform called Policy Vault. Second, we have the business qualified people. We have our own internal team who can play a huge role of our referral. Because our own direct team, I'm saying, who is customer facing, and then the point of sale. So that's, I believe, going forward, mutual fund will definitely grow at a normal pace, but I think insurance will start contributing significantly better for us. It's going to be a huge growth driver.
In the mutual fund, top 5 accounts for nearly 52% of your revenue, and one account for nearly 12%. Who's the top 5? Can you just give us an idea?
So I think it's a part of industry, same structure. I think it would be, I will not be able to tell you 1, 2, 3, 4, 5.
Who's the top one? Because who accounts for 12%? 12.8% basically.
So it's HDFC.
Okay. So and I assume that the rest would be the top hierarchy of AMC, which is there. What is the kind of payable days that you have? Because I was looking at your RHP, and your trade payable to creditors was around 113 crores, which has gone up compared to FY21. Why is that going up? I think you have a 90-day period or something, right? In that's how you pay it.
So I think if you look at the trade payables, there are two parts of the balance sheet. One is the stock broking arm, another is the mutual fund distribution arm. In case of a mutual fund distribution arm, it's typically a 1-month cycle of my brokerage payable to my partners, which is hardly about 1 month outstanding. And stock broking is normally volatile. So I think it might happen that the last working day, when the 31st December year has closed, if it is a holiday or something has happened or some reason would be there, I think there will be a 30-40 crore volatility always remain on the book side.
Okay. How does it work for you in that sense? Because your margins at 25.4% for 9-month period have gone up significantly compared to 21.6% for FY21. How easy it is to sustain those kind of margins?
So if you look at, I think the operating leverage will definitely start playing out now in our favor, because if you look at in last 5 years, we have expanded our branch network from 72 to 110. So almost 50% branches has been added by us in last 5 years. Same way, because branches are added, relationship managers' strength has also become almost double in last 5 years. And probably today, if you look at our 110 branches, I think we have covered almost a pan-India coverage has been done by us. And now we are on upsurge of a significant growth. So probably the fixed cost of employees, variable cost of, so fixed cost of employees, rent, administration, they will probably now become more or less stagnant. So when you see the upsurge, so I think significant reason for the growth is there are two counts. One is the organic growth of the Prudent per se, and another is the 8,100 crore of Karvy mutual fund assets which we have acquired in the month of December. So actually in the month, the Karvy revenue came only in the month of December. But if you look at going forward, I think Karvy will start playing with almost 20% of my assets. तो जो 48,000 करोड़ का मेरा assets है, if you other way around आपको बताऊं सर, तो मार्च में मैं 30,800 crore पे था. I am now at 48,400 crore in December. Within that, 8,000 crore is of Karvy. So my organic growth is from 30 to 40, and inorganic buy of acquisition is 8,000 crore.
So is it possible for you to tell us what is the kind of revenue that you get from Karvy? I mean,
so I think it's not.
You said only 1 month of revenue was counted in the 9-month period, right? If I'm not wrong.
Yeah, absolutely.
So how much will it be?
अलग से सर निकाला नहीं, but my back of the envelope calculation says that Karvy will generate a monthly revenue of about 3.5 crore. Karvy's book has about 65-67 basis point structure, so we'll generate monthly revenue of about 3.5 crore. And there are Karvy has a similar model like us. They also had a large partner network, where I think my brokerage expenditure will be close to about 1.1 crore.
And if they have the structure of 60-65 bips, that's what you said. Yeah. Will it dilute your overall blended thing going forward?
So I think because
is there scope to increase Karvy's to nearly 1%? That's what I'm asking.
No, there are two things. One is that definitely it will reduce my overall 1.06 to, let's say, for example, 1.02. That is hypothetically. But the most important point is Karvy assets acquisition has been itself is very, very remunerative for us. That is number one. Number two, normally industry has what is the portfolio churning of about, say, portfolio doesn't stay more than 3.5, 4 years, right? And Karvy was not functional for last 2.5, 3 years. So जो भी आपकी इंडस्ट्री में चेंज आया अक्टूबर 2018 के बाद, where every entire industry moved to trail. So because trail has been better than the upfront. Upfront में क्या था, आपको 2% मिल गया, trail 50 पैसा था. Now trail is only 1% perpetual. So I think Karvy assets, whenever it will churn, it will come to 1% from 65 basis points.
Okay, so it has a potential to go up, so you'll be able to maintain your commission to AM ratio, which is there. Sanjay, it's been a pleasure talking to you today. Thank you very much. The Prudent Corporate Advisory IPO, which opens on 10th of the month and closes on 12th. It's priced between 595 and 630 rupees per share. It's an OFS of 538.6 crores, where one of the private equity Wagner, which is a TA associate arm, is selling, and along with one of the other selling shareholders, which is there. That's all from BloombergQuint. Thank you for watching.
Thank you very much, Sajeet. Thank you.